A very good afternoon. Welcome, NSSF Financial Intelligence Program, our monthly program. As it's been our usual agenda, as it's been our usual monthly agenda, to always find out some time and we talk about money. So today this is one of those days, and we always say we congregate into a school and we go to the school of money. My name is Apollo Mbowa. I am the customer financial advisor, just a fancy name for someone who looks at your money as and when you let them look at it. So as it has been always, we converge and we discuss money. And in this discussion, we are saying, let us all become students of money, because we all do a lot of chemistry, biology, so many things we do while we're at campus and all the other entities, but no one ever puts us in a school of money. And I am the self-appointed headmaster of this school. So as we go on for the next 1.5 or 2 hours, I am your headmaster, and I shall be addressed as headmaster, sir, for any engagements. Thank you so much for joining us. We are streaming live on all our social media pages. For those of you who may not be able to get in via Zoom, you can catch us on NSSF Uganda pages, and we shall be moving on. As it has always been, we start with a brief introduction. We have a panel of distinguished experts today just to talk about what is there for you as a corporate employee. What can you invest in at your desk? We have the financial markets. We've been having quite a little bit of backlash of what we call the other things that are not financial markets. But for the purposes of this webinar, we are going to categorize this into two. We have places where before you can get in, you have to have a license, and those are the banks, the capital markets. We have the investment clubs, not the investment clubs, but the investment managers. Apologies for the feedback. I hope we are good to go. Apologies for the technology, but we shall get on. If I may share my screen and just take you through. Today we are going to talk about options, and the bit about options is we define poverty as lack of options. If you do not have options, then you are a poor person. So as a person working out there, an NSSF member, saving with us or not saving with us, what options do you have? We're not talking about your NSSF because that is coming at 55 or at 50 or any of the other 5 categories, or when the amendment gets done. But what do you have right now that defines you as options? So we talk about options, and we mean those other things that you are doing that are speaking to your retirement. And if you follow what we have on the screen, we have what we call a non-financial, or for the purposes, the gentleman here will guide us and we find a proper word. We don't have to call it informal. We called it non-regulated. Then we had a backlash because they said, no, I am a farmer. I am regulated by quite a number of entities. Why do you say I'm non-regulated? We called it informal. Then the farmers again came out and they say, we have one of the best industries in the country. Why do you call us informal? So we're having a challenge. We called it alternatives. Then the analysts in the investment sector said, no, alternatives are derivatives and all those fancy names they call their things. So we are in a blockade of where to call it. But to just give you a hint, when we talk about the other side of what we are calling non-financial alternatives, we're talking about things farming, we're talking about animal and crop, we're talking about businesses, real estate, we're talking about consultancies, service industry, forestry, etc, etc, etc. The list goes on and on and on. Looking at the last compendium from the Uganda Investment Authority, we got around 500 listed businesses that one can do. So the list is long. On the financial side, we are talking about things to do with, and when I call them things, forgive me because I am trying to get the proper words, but we are talking about all those options to do with banking, the options to do with capital markets, the options to do with insurance, the options to do with pension. So this This afternoon we are going to be divulging more about what can we do on this side, on the side of the financial markets, also on the side of the non-financial, or do we need to do any of them? So those questions we'll leave them to the people here to answer. And as I wind up, I just want us to share this reflection together. NSSF takes 5% of your money. That's basically, by law, we are mandated to take away, and none of you volunteers, but we can't pick it up before you even get your money. We take away 5% of your money. That leaves you with 95%. Then URA comes and picks its portion, about 30 to 40%, depending on where you lie, leaving you with about 65%. Now, we are saying when NSSF takes away 5% of your money, count that as a long-term savings. That is money it is taking for long-term savings. The 65% that I've been left with, I need to squeeze in short-term and medium-term. All things to do with short-term, all things to do with medium-term need to fall under my 65. What does that mean? Food is a short-term need under your 65. School fees, medical, in your 65. Housing, medium-term, you're 65. By the time you come for your NSSF, let it take care of you for the next 30 years after retirement. Don't pick your NSSF to build a house or your NSSF to start a farm. We are saying all those things fall under the 65, and today we shall explore how can I start while I'm in employment, so that when I pick my NSSF, I am just expanding. NSSF money is not for starting. So what are we doing as NSSF? As NSSF, we are sharing with you sensitization programs. That's the best we can do. We can talk and talk and talk. I am personally paid to just talk. All I do here is talking, and unlike you are not paid to talk. If I'm paid to talk, let me do the talking, then you do the action. So the responsibility on your side is to do action. Act. The essence of knowledge is to do. It is not to talk. We shall talk today, and then you have another deliberation about our talking. No one is paying you. Me, I'm being paid. So, ladies and gentlemen, let's get into action. And what we are doing as NSSF is try also to get into a little bit of your action. Assist where we can. And we are doing this through our partners. We have several partners. And we are saying, let's group people in cohorts, in groups. If we have a group that references itself as OBs, and all they meet about is to remind themselves of the history, why can't we have a group where it's just farmers, it is just coffee people, and when you meet, you are talking about which bacteria is eating up, which wilt is taking your coffee, or which markets we can share. So as NSSF, we are trying and mobilizing that section. What we can do is offer a platform. The action is basically on your side. What is it that you want to do? Who is it that you want to work with? Who is it that you would aspire to have a farm like, and come to NSSF? Then we'll link you with that person. We are deliberately doing what we call action cohorts. So far, we have established action cohorts on forestry, on coffee, on Hass avocado, on goats. We have also established an action cohort on financial markets. What are those things? Let's through this action cohort of financial markets, we have the market players. Today you will meet one of the market players. The market players will be in there. So when you say, I want to do a share, we do not give you a second chance to start thinking about it. The market player will immediately come to you and say, here are the forms to sign. So, ladies and gentlemen, as NSSF, we shall do our part. You need to do your part. And as I'm saying, we are paid to talk. Your only certificate out of this program and participation of this program is for you to act. So allow me to stop here. My job is basically to talk and talk and talk, but I don't want to utilize that because today we have a distinguished panel of people. They don't just talk, but they do. So they are going to share their opportunities, and it's my privilege to introduce them, and they will take us through the financial markets and the non-financial markets. To join us today, we have Maurice Mugisha, a media practitioner for the last 18 years. Maurice has worked in Uganda, has worked in Kenya in the media industry. Right now, currently, he is the Deputy Managing Director of the National Broadcaster. We call it the National Broadcaster, the Uganda Broadcasting Corporation, UBC. He previously worked with the Nation Media and for over 12 years as head of news. Morris is here today to moderate this conversation, and joining him as panelist, we have the Chief Executive Officer of the Capital Markets Authority, who has quite a long CV, and today we are not here to, as I said, we are not talking, but one thing I can tell you is he has been in Zanzibar, I'm seeing MBA, I'm seeing Cape Town, there are so many things attributed to him. Currently, he mans that authority, the Capital Markets Authority, an authority that is mandated to regulate and license the capital market activities in Uganda. Joining us is Keith Kalyejira. He will allow me to call him Keith. Thank you, Keith, for coming. Then lastly, a man with a very long CV but never likes people going through that CV. Downtown to the downtown people, he's the person we attribute to Bukede TV. He revolutionized the local content, and every TV now has a local content TV, thanks to that gentleman. He is the grandson of Omwami Kabushenga. He is the son of Mr. Kabushenga. He is a lawyer, a farmer, and he likes going by the name Robert. Gentlemen, welcome. Allow me to hand over to Morris, and then we have our discussion. Morris, over to you.
Thanks, Apollo. You've done the introduction, so I will not go into this. Thanks, Headmaster. Okay.
Allow me to interrupt, because I'm the headmaster. Allow me to interrupt. I've introduced them, but we'll just want to understand who you are. So we'll just run a poll to understand who is it that is with us. Are you female? Are you male? Are you old? Are you young? So if Anne-Marie is kind enough to share that, and you take off about 10 minutes, no, sorry, about a minute to share that. The poll is saying, are you male or female? What is your age bracket? Or in between? Or in between? So we're going to be closing that in the next 5 seconds, then hand over to Morris, a media practitioner for 18 years. Wow. There are some people here, you can see are below 20. Those people have been alive all the time you've been in media. So in 5, 3, 2, let's close it and let's see what the feedback is. So, gentlemen, of course, we have also gotten backlash about why isn't there a lady, and we have asked them. There's no lady CMH CEO. Otherwise, if there was one, I would have brought.
Not yet.
Yes, not yet. Yeah. So 61% of us are gentlemen, 39% are ladies. The majority of the participants are between 20 to 30 years, with 43%. The next is 38%, 31 to 40. And above 50, we have about only 6%. So, gentlemen, that's the audience you will be addressing. Thank you so much.
Thank you, Headmaster. It's good to share the statistics. We get to understand who is actually watching and joining this webinar. I want to welcome you. It will be a great conversation. I'm actually also learning myself, having invested in some of the portfolios we'll be discussing. So I want to welcome Keith and Robert, students. I think this would be an adult class, Robert, and Keith if we were back in class. I like that. Keith, let's begin with you, because when we speak about financial markets, not a lot of people understand what the financial markets are. Maybe you want to briefly tell us what financial markets are. And maybe also allow you to speak about the Capital Markets Authority and what you do.
Okay, thank you very much, NSSF, for having me. Thank you, Morris. Pleasure to share a panel with Robert, my longtime friend from many years
OB.
back. I won't mention how many years, because he was at...
Okay. We went to farmer schools.
So really, the summary of financial markets is that in any situation, there are people who need capital, and there are people who have capital. The people who have capital are the savers, the likes of you and me, and many others out there who have regular jobs and are able to save a little bit of money. And there's no saving that is too small. Whether you're able to put aside 100,000 shillings every month or 1,000,000 shillings every month, that is a significant saving. Now, there are those who need money, and those who typically need money are governments, because governments borrow from the financial markets, and also businesses. Businesses also borrow from the financial markets through issuing corporate bonds. Sometimes they raise capital by selling shares in their businesses. The biggest savers or the biggest owners of capital are the retirement benefit funds, and NSSF is the biggest. There's a joke that NSSF is too big for Uganda and might soon be too big for East Africa, but I'll explain that later. So retirement benefit funds are the biggest owners of capital, and they have to deploy this capital. The biggest borrowers and users of retirement benefit fund savings are the governments, and this is typical all around the world, partly because of the quantities in which the government needs money, but also the quantities of savings that the retirement benefit funds have. It's not easy for a retirement benefit fund like NSSF to deploy money in a small business that needs $5 million. But it's easy to lend this money to government that needs 80 billion, 200 billion per auction, that type of thing. So it's much easier. So that's really the financial markets in summary. It's a market where those who have money get together with those who need money. And the Capital Markets Authority is essentially the referee.
No, it is perfect. We know you as a coffee farmer. Yes, and we know you as a Ugandan coffee farmer. Yes, totally. I know you. Hey, which one is whose? There's names. I drink the black one. We can see where the cows are going. Yes, for some sugar. No, I'm saying the biscuit has some sugar, so you don't need any sugar in this coffee.
Now that we have one of the greatest sources of income for Uganda, we can only talk about financial markets.
I knew you had to put that one in. Any time for coffee. All right.
So Maurice, really just summarizing the role of Capital Markets Authority. We are the referee. We make sure that everybody who is participating, especially the people who are meant to give advice, are licensed by us. We normally advise people to only deal with people who are licensed, as opposed to simply falling prey to those who promise very high returns. So we're essentially the licensing body. We approve offers of securities in case somebody wants to raise capital from savers. They bring something to us called a prospectus that we have to review and give a no objection to, so they can go out to the market and raise money. So we are essentially the body that licenses and protects investors and makes sure that there is law and order, if you like.
You're the police of the capital markets. Yes. Let's discuss something that we've been talking about over time, the fact that this is a very highly regulated space. And we were speaking to, when you speak financial markets against the non-financial markets, which, we also wanted to call the unregulated and also wanted to call the alternatives, and then we've disagreed on all this science and English. So why is it that it's highly regulated? Is it that you're dealing with people's money and you need to be extremely careful with people's money?
The reality is that markets have existed long before regulators. But after some time, there's a realization that you need to have some referee to just draw the boundaries within which these people in the market should play.
Yes.
Because there are many cases in the past several years, hundreds of years ago, where you find owners of media houses also owned, capital. So they were able to push out bad press about companies just so the value of the company could go down, and then they go and buy these companies. Now, these were really malpractices. So there's need to ensure that there's somebody who was there to make sure that the people who are playing the market push out the right information, act on the right information, don't take advantage or are not conflicted by the information they have in their possession. You have heard of insider trading. So there's a really need to bring in some sanity in the market that had kind of gone out of hand, essentially.
All right. This now we're getting deeper into the contents of our conversation today. And so we are trying to, to talk to as many Ugandans and all the others who are watching us across the world about interesting them in the financial markets and why we need to offer this option to Ugandans as an investment portfolio for their savings. If I was, fresh out of university and I'm looking to begin saving, where do we start from? Where do I start from? Keith, why would you advise a young man out of university to begin thinking about buying shares, about, trading in bonds and bills?
Thank you, Maurice. The thing is that the easiest way of saving is through your bank account. Open a savings account or a current account, and just sort of watch your money grow. But after some time, you start realizing that, hey, you might be letting go of a 10, 12% return investment. And the reality is that when you've just started work out of university, you're trying to save to either build a house or buy a piece of land. or maybe buy a car. But in the meantime, your money is sort of lying idle. And you could leave it in a current account, being just attracting charges from the bank, or you could put in a financial instrument where you put aside 100,000, 200,000, 500,000 shillings every month consistently in a unit trust, our collective investment scheme. We license 5 of them, 4 of them are active. And that's how you'll be able to earn a reasonable return. And these unit trusts typically have about 4 different types of funds: money market funds that invest in treasury bills, income funds or balance funds that invest in treasury bonds, equity funds that invest in shares in the stock exchanges, both here and in Nairobi and other parts of the world. So it's important that you sort of surrender your savings to a licensed money manager or fund manager whose job it is to analyze which stocks to buy, which bonds to buy, and who can actually give you your money when you need it. They're in a better position to get a good price for you in the secondary market. I hope I'm making sense.
Yes. I'm really hoping that it's not too scientific for the people who are listening, and make it a bit easier. Robert, you want to help? Because, yes. Or press that microphone. You know, Robert, farmers, that's a problem. You don't have automation. Yeah, you need to...
Really?
Yeah.
Okay.
Yes.
Can you hear me now?
Network now is there. Yes.
So I was saying that, Keith, is describing it as it is. But I want to give a very simple
illustration
of how you can start saving.
Yes.
When we were young, these days things are a bit better. But when we were young, the people, they would give you lunch.
Mm-hmm.
If it had potatoes and cassava, now the people who became savers later on in life are the ones who would never finish all their food.
Mm-hmm.
He eats a bit and he keeps the rest for tea in the evening.
Yes.
So when you are drinking what is called dry tea, the other man has his potato and you're looking at him badly. but he saved his potato. He had some lunch sparingly. He saved his potato for evening tea and he was able to have something additional. So basically, saving is not just about cash or financial savings. It's a behavior of consumption.
Robert, but you see where I wanted Keith to help us understand why you could keep it in the bank and earn a 2% or, whatever the small interest rate you have.
My point is that
yes,
by the time you get to keeping money in the bank.
Yes, and that's why I was asking this question, because I wanted you to explain, yes.
Yeah, sure.
When you get to keeping money in the bank,
yes,
you must have money first. Mm-hmm. There must have been a meal.
No, actually. You don't have to have money.
Yes.
What you have to have is developed a behavior pattern.
Okay.
Exactly.
Now the English said
now you have to be able to discipline yourself and say, I will not consume everything I have.
Yep.
Now that is not just an issue of whether you have money or not. It's an issue of behavior. So if as a young child, when you are growing up, everything that was put in front of you, you ate it, then you're going to behave exactly the same way you were behaving that when you were older. If as a young child, you used to take other people's things without their permission and never return them, you will be a thief and a corrupt person later in life. It's as simple as that.
So we must pick this when they're still young.
Exactly. So the young people today need to start teaching themselves delayed gratification and avoid consumerism. If you have 2 million shillings, by some chance, maybe a relative has given you 2 million shillings, why are you buying a phone of 2 million shillings? So it's a behavior issue. We're dealing with the way people are raised and brought up.
All right. I like that we are beginning at a young age, and I know if you're joining us and you're 60 years old, you're wondering how is this going to relate with you. We are coming. We'll come to you. We'll come to you. And Robert is a good example. He's just retired from public service.
I am not yet 60, but
no,
because you're
early retirement.
You're going to reduce my valuation. People that are seeing me, they think there's still some energy. Now
you're an example of early retirement, but self. Imposed. So, Keith, let me come back to you because Robert lays a great foundation for us in terms of why we need to begin saving at a very young age. But then the decision then to move into unit trusts. Now, you need to, you've explained what they are and why. Is that because there's a better return on your saving?
Yes, they tend to offer a much better return on your saving than you trying to do it yourself, because I'm sure there are people out there who have tried to go and buy shares themselves. I won't mention which companies, but they know themselves.
They've burnt their fingers.
They've burnt their fingers. They've gone to a bank teller, they were depositing money, and the bank teller says, you know what, there's an IPO going on, or you could buy shares, and they just went and bought shares without talking to an investment advisor. So, yes, unit trusts are the safest place to go to because these are basically managed by people whose job it is to analyze what to do on your behalf. When you do it yourself, you might be lucky. There are people who have bought government bonds themselves directly, long-term bonds, short-term bonds. But overall, it's you're better advised to seek investment advice from people whose job it is to analyze where to invest your money and how to save.
So, Keith, maybe let's now move into the detail. What are the options available? And so, and feel free to give me a portfolio mix of if this is where you are at and you have 10 million shillings, and this is where you're at, you have 100 million shillings, this is exactly what I would think you should be doing and where you should be putting your money. So that I bring in Robert, who's decided that even as some of that money makes money for him on this end, he also wants to make it a bit productive on the other end. I don't know how you'd advise, because the corporate, we have a growing middle class, and if you look at our spending power, it's on the rise, and we're if you drive around Kampala's streets, Ugandans have great cars. I'm not so sure, like Robert was saying, they're earning the money and buying. The money comes in and they straight away go into the market and buy a Mercedes Benz.
Before they even earn.
So they're borrowing money to buy and live a certain class. So we didn't talk about lawyers here. So you might bring me problems. We have lawyers in this room. So help us understand where you would be putting your money based on how much you've actually saved, and why you need to actually think this is the right place to put my money for a return.
Show started, we're talking about school and calculations and being mathematicians, but whether we like it or not, all of us are mathematicians.
It doesn't matter if you got an F9.
It doesn't matter.
At all level.
At least you try and do some computations on a regular basis. So the thing really is about return. Which investment is going to give you a good return? And people have different experiences out there. Some have invested in land and they'll tell you about how they bought land at 10 million in Nigeria. 20 years ago, it's now 150, 200 million. Fantastic. There are also other sad stories about land, but that's another discussion. Now, before you can buy a piece of land, how are you going to be accumulating this wealth? It's going to be from your income, and as Robert says, how much you can delay, how much gratification you can delay and be able to put aside. The less you're able to live on, the more you're able to save. It's as simple as that. And so it goes into your whole, your lifestyle. But as you are trying to accumulate your savings to a point where you can buy a piece of land or be able to build your first house, it's good to put your assets, your savings somewhere, and not, as I said earlier, not in a bank, idle, just simply being charged, attracting bank charges. So you could invest in bonds, you could invest in treasury bills, you can invest in unit trusts, as I said earlier, you can invest in shares if you have the knowledge. But so it really goes to the amounts. Now, there are some people who have sufficient savings, like upwards of 500 million, a billion. Try and think about if you were to build a house with, say, 400 million, what sort of return you would get on that house? What kind of rent will you earn from that house? 2 million shillings. Now with COVID, many houses, the values have ended up going down, or the rentals have ended up going down. So it's really a return on investment game. If you're able to earn, say, 2 million per month from your house, in a year that's 24 million, divided by your total capital outlay of 400 million, that gives you a return of less than 8%. So if you put this money in a treasury bond, which is paying you a net after taxes, after withholding tax of, say, 11%, it's earning you more. But the difference is that the value of a house is gaining over time. Well, because of inflation, etc., I mean, we thank God that the shilling has remained a good, sound store of value over the past 15, 20, 25 years. There's always been a bit of skepticism about the shilling, but if you look at inflation, the dollar devaluation over the past 15 years, it's been really stable. And the Bank of Ghana, I think, has done a fantastic job. So all those people who are out there skeptical saying, I can't save in shillings, I'd rather save in dollars, let me open up dollar accounts, I think they've been really hit. Some of them have been badly hit. Just watching.
There's no return.
There's no return.
There's no return. There's no interest being paid on dollar accounts.
So I suspect they're almost unhappy that the shilling is not weakening.
They're hiding their heads in the sand.
Yeah, but the thing is, and we're talking about action. I think it was Apple talking about action. Many of these ideas can float into our minds. You can come across them at dinner parties, through conversations like this. But the point is, take action. During the time when
Make the leap.
Yes, make the leap. They say investment is like bathing in cold water. Before you get into a cold shower, you're afraid, but once you get in, you say, now, why was I afraid?
Yeah, you first put the feet.
I mean, I remember during the time of when COVID just hit, and we're just watching the markets go down, especially in Nairobi. That
Yep.
was a buying opportunity for perceptive investors, because everyone knows that this crisis has never last forever. So but just need to be brave. You need to be bold. You need to have courage and take the leap, and get used to it. Sometimes people start with small amounts of money, but as time goes on, they're able to. I know that people who have bought shares with 2 million shillings, yet his net worth is upwards of 1 billion shillings. But he says, I'm going to buy shares, and he puts in 2 million shillings only. I mean, what are you doing? Are you really investing, or you're playing around? But as time goes on, you get bold and you're able to commit bigger sums, 200 million, etc. But that really comes with practice. That comes with advice. But the important thing is to take the step.
All right.
Don't just sit on the fence.
Robert, I'm not so sure if the headmaster, Apollo, brought you here because he thought you needed to defend what they call the non-financial markets. And he explained what they are, which is real estate. You could talk about agriculture. You could talk about forestry and whatever it is. But that's been sports betting. Yes,
money
that's been our culture, Robert. And when we grew up, we were being told, when you make a little saving, buy a piece of land. When you then make some more money, put up a property on that land. If you can and you find some extra money, maybe set up a farm. You get a 1 cow too. Then maybe get goats. Or go into forestry. And we've been told everything. In fact, I'm told the best place to find all these conversations is the golf course, Robert, where people, after they've played a round of golf, are talking about things like, investing in grass, and how... and how it's the right time to be able to invest in this form of agriculture or against the other.
I don't know how much.
Your experience. It would be nice to listen to you because you've come through that system.
I don't know how much discussion about farming goes on
At the golf course.
because it's not a very productive use of a lot of land. I mean, they're just walking on it. I mean, it's 152 acres. So a few elite guys like my friend Chidiowa and Innocent are just walking up and down. I mean, it's not fair. I mean, I look at it and say how much coffee I would produce on that land, and I'll be fabulously wealthy. But I wanted to say 2 things. One, from the time of human existence, the one activity that defines human existence is economic, from hunter-gatherer societies up to today. Our whole existence is about economic activity. Even when we were going to gather fruits and kill animals, that was essentially an economic activity. What we are discussing now, whether it is the financial markets that Keith have been describing, all our endeavor is with one objective only: the creation of wealth. That's what this is all about. So the moment you understand that, then it's not either or. It's just that you now have, you see, from a hunter-gatherer society to where we are today, you have various options of creating wealth. The question is, and this is, I think, the point that Keith was making about mathematics, Chibalo, getting advice, is you as a human being, how do you make the decision which wealth creation option to pursue? That's absolutely important. So Keith is advising that you should pursue wealth through financial instruments. And he's listed it. He's laid out for you unit trusts and everything. I will tell you that pursue wealth creation through agriculture. Then I will get an agronomist who will advise you the best way to get the best product and to sell it. It's all the moment every human being sitting out there understands that all human endeavor is about creating wealth, then you'll understand that the 5% you're putting in NSSF is actually a drop in the ocean, because
True.
it's a very small thing you're doing, and yet you could do so much more. Now, I wanted to just tell you another interesting story. So guys come to visit me at the farm, and I take them around, and then they start marveling. So, where did you get
This money.
This money?
Yes.
And I
That's
look
the
at
big
them.
question.
Yes, and I do 2 experiments, and every time I ask them that question, there is complete silence at the end. You know what I do? I ask them, all of you 10, 15 people who are here, show me the phones you are carrying. And in their hands,
iPhone 12.
in their hands collectively, they are carrying 30 million shillings that is completely unproductive. It's just there.
And depreciating
Yeah,
every
they are
single
there
minute.
talking, sharing messages, here photos with Kapshenga's cows. How? For 2 million shillings to do that? Then I tell them, let's do a valuation of the means by which you came here. And there's 300 million shillings packed in my compound. And I asked them, if you really had a shortage of money, how come you're able to raise enough money to buy all these cars? Then I do a third one. Have you ever found a Ugandan who has gone to go organize a wedding that has failed to raise the money for the wedding? If we have ability to raise money for consumption, and it is there, there's full evidence, surely we can raise money for production. Surely we can raise money for investment. Surely we can raise money for savings. That's why I said earlier on, so our generation is very bad at that because we grew up during a time of shortage and we have been compensating for the last 30 years. We are binging because we grew up sharing clothes with our siblings. They pass them on. Now every time you see a new shirt, you want to buy a new one. Because you didn't have shoes for a long time. Now when you see shoes, you want to buy 5 pairs because you're trying to deal with a shortage when you were younger. But actually, if you had turned that experience into frugality, into a saving, like the Asians do, then we would be very far. So for me, I think that we need to target the behavior of people growing up. We need to confront the demon of consumerism in Uganda. It's a false consumerism. It doesn't reflect our economic activity. It reflects desires and wishes and or whatever is developed elsewhere. So people are watching how Kardashian is dressed, and they want to dress like that. But Kardashian is in an economy whereby appearing as a photograph, she makes $10 million. You, even if you put 35 photos, you will not make 10,000 shillings. So we need to have that reality in people's minds.
I know we will come to a portfolio mix where, I think, Robert, would be nice to get to understand what you'd advise as the right portfolio mix. How much do I put into real estate? How much can I put into maybe agriculture? And then how much can I put into, the financial markets? But I wanted to come to Keith. Keith, what Robert is speaking to is a space that is, you have to invest quite a bit of capital, and there is high risk. However, it's also unregulated, and I know he'll disagree because he believes it's also regulated in a way, but high risk because, for example, with agriculture, if you have a bad season and you're not insured, because now there's, at least, Robert, there is agriculture insurance right now.
Maurice, let me interrupt you.
Yes, I am happy for you too, because I'm speaking to your space.
Yeah, because you're talking about high risk. Do you know how much high risk behavior Ugandans engage in?
Go ahead.
Do you know how many Ugandans are walking around without masks right now? Isn't that high risk behavior? Do you know how many people in Uganda engage in unprotected sex? Throughout. I mean, we're engaging in high risk behavior. So what is risking a few million shillings? Is that risky really?
That's where we were going. You see why I wanted to bring it up?
Somebody once said, what do you have to lose?
Yes.
All you have to lose is some money. So maybe we also need to detach ourselves from that hold. Because sometimes if you fear to lose money, you might never ever take that step.
Because there is, amongst the investment options you've offered us, there is actually risk involved. And I thought Robert would actually hit me with that. That some of the spaces Keith is talking about are actually high risk, like shares. If I was to buy shares, and you spoke to the fact that some people lost money, a lot of money, especially during this period, but also those who invested some money during these very, very, very popular IPOs, not Robert's IPO, but these other very popular IPOs.
That was my fault.
Why would you advise, or how would you advise somebody watching us to be able to spread their money based on the fact that Robert speaks to production and speaks to an area that I think is still unregulated, but may not necessarily be high risk as we would want to speak to, and yet they could actually invest their money in bonds and bills that have literally no risk?
Yeah, I think what you raise a very important point called diversification, because there's an age-old saying, never put all your eggs in one basket. Don't get all your savings that you're able to put aside and go and start a farm and do nothing else. Don't give all your savings to your brother or sister who is running a business in Chikubo, importing aluminium foil, making huge returns. Anything can go wrong. So it's always good to diversify if you can. It's also not easy to diversify a small amount of money. If you've got a 10 million shilling saving, it's not easy to diversify it. But at that point, you just have to work hard and improve yourself, invest in yourself to the point where you can hopefully grow your income and also grow your savings. So yes, diversification is key. Robert did touch an important point when he said that you have to decide, you have to make a decision about what it is that you want to do. What do you think you're suited to do? You have to do a SWOT on yourself. You have to sort of know who you are. What are your strengths? What are your weaknesses? How best can you leverage this person called Robert or Keith or Morris and shove this person into the future? Into which area are you best suited? Are you likely to be more productive? And so it's important that you really know yourself at an early age. Others, you end up getting frustrated and making mistakes and find yourself in the wrong place when it's a bit too late to make adjustments. But yeah, so really the main point is about diversification. Obviously, lean more to where your strengths are. Put more of your savings, be overweight where you think your strengths are, and be underweight where you think your weaknesses are. There's no point in trying to put most of your investments in an area that you don't understand, just because a friend of yours has told you that there's money in this area, and you believe this person because you met them at the golf course, just for example. Yeah.
Robert, let me come back to you because of the conversation we are having. And NSSF has been telling us, listen, please look at both options. Look at putting some money in the financial markets, but also look at investing your money in, the non-financial markets, the real estate industry or agriculture. And a lot of us, Robert, have been waiting for retirement. And you're looking forward to your NSSF money and saying, whatever I'm making right now is for me to enjoy with my family. And I still have some good money at NSSF, and I'll wait until I have retired to make a great investment decision with my 300 million, 200 million, or 100 million, depending on how much you've been saving with NSSF. How late can you be to begin thinking about your investment options?
So first of all, it is never too late. It is never, ever too late. And if people want to understand that principle, they should follow the story of a man in Kenya called Chris Kirubi. He's the epitome of it never being too late. Chris Kirubi is in his late 70s, and he was so angry with the return on his coffee farm, which was about a square mile or so, that he uprooted everything and has started a farm on Hass Avocado. Another one is Gerald Sendaura, former Minister of Finance, who is in his mid-70s and has been replanting over 200 acres of coffee. 72. So the thing is, it's never too late. Let me just say that. But I want to say to those watching us, because most of you are employees and you're probably savers of NSSF, stop looking at NSSF as your heaven. It is not. It is just a small thing. And why? So, Maurice, I have just, they call it retirement because that's the word they use. But I've just changed.
Is there a word for in between?
No, for me, I feel I've just changed careers.
Okay.
I have left an office job to go and start a career as a farmer. Keith knows I was born here in town. Okay, I used to go to the village, but you'd never quite describe me as somebody from a rural farming background. But I have made that break and gone to do that. That's a completely new career. Why am I bringing that up, Maurice? I want to tell you, I want to tell Keith, I want to tell the guys who are running this webinar and all of you who are seated out there. If there is one thing you should learn from my recent circumstances is that there will come a day when no one needs your labor anymore.
And for some it comes earlier than others.
It will come. Either you will die, in which case it's too late. Okay, you are lucky you've died. But it will come. And fate is very strange. You may end up living longer than you ever worked. So you spend more years living after you. So when the only economic activity you have right now is your labor. When it ends, what are your options? Zero. So use your labor right now. That's your capital. That's what you have. That's what you can leverage. Use your labor right now to build ability to survive economically. So let me stray into Keith's territory. If you are not as crazy as some of us wanting to go and put crops in the ground and you want to play it safe, then go and get a licensed certified financial advisor who will give you some safe bets. But get a portion of your money and put it in an activity or a process that generates wealth. What do we mean by generating wealth? It means that your money is producing zizala. That's why there's a game in town here called Zala. So Keith is one option. Us in farming is another.
You mentioned
option.
Zara, and I'm wondering whether the young people, these millennials, know what Zara is. But
I see them writing themselves, calling themselves a Muntu Wawansi. As if we are the ones who know Muntu Wawansi who plays Zara in a Katwe. Because, so those are the things. So, but back to the point that you're raising,
Yes.
is that the starting point is to know that your labor is an economic activity. It's what generates income for you. It's the only asset you have. How can you leverage it to convert it into other advantages?
yes,
If you don't think along those lines, I can assure you, you are doomed, and no number of governments combined in the world can save you from that terrible choice that you are making. And please, I keep telling young people when I go to address them, nobody, not the president of Uganda, not the Pope, not the Kawaka, no, nobody, not even your parents, owes you a living. You must make these choices on your own. You can't say, me, my parents didn't teach me how to save money. What the hell are you talking about? So please, we have been brought here. For us, me and Keith, our generation, nobody taught us about money. We didn't have that chance. Well, because they didn't have any money anyway to teach us about when we were growing up. We are here. We are telling you these experiences. Please, don't eat everything. For us, we used to eat everything. Now we are reaching out this age and we're realizing, my God, I should have started this farm of mine like 10, 15 years ago.
yes.
So, please, just know your labor will end. Then you'll come and get your NSSF, and within 2 years, you'll have eaten it. At 55, you can't make those investments with that money. That money is for the knees are shaking, you can go to hospital. The wife needs to get some eyes treatment. But so, do something else. Okay, I understand, and I wanted to point this out. Our society, we're not in the US or Europe. We have something which the South Africans have coined a fantastic name for. It's called black tax. So there are many obligations we have. We have to look after our brothers, our cousins. When people fall sick, we must contribute. The village, when somebody dies, we must. There is black tax. That's fine. But even with black tax, can you put away another 20 or 30% for generating wealth? Let me raise another issue. When you are working, one of the things you gain is either a promotion or you get credibility. What do I mean by credibility? So Maurice, now you're deputy managing director of UBC. That counts for something. When you go to buy an item for investment, let's say you decided to build apartments as your investment. When you go to buy those items and you say, I am Maurice Mujisha, somebody will give you credit. So it's not just the banking money. There is, do you have credit? Are you credit worthy? Do you have a name? Can you be trusted because of the job you do or the position you hold in society? In other words, can you leverage your current position in more ways than one? When I was much younger and I had a name, do you know how I leveraged it? I used to get free entrance into nightclubs. And free beer.
The millennials are wondering how that was a big thing. Nightclubs were a big thing for us.
It was a big deal for us. There was only one nightclub. I think there were two. And to enter them was very expensive. Now imagine me getting a complimentary for a whole year. But then that was for consumption. Now I ask you, if you've built a name, at whatever level you are, how can you leverage it? Either to join an investment club or to get something, do farming. And by the way, even for us in farming, there's diversification. So all of these things, that's the, Keith, you're saying, I don't know which proverb is the one that I've been using. Don't test the depth of a river with both feet.
Yes. He used the cold shower.
Yes, the cold shower. So this is the same thing. So I know we've said many things, but remember that your labor will end and your ability to generate wealth through economic activity will be severely constrained. And it can end for various reasons, including your job stopping to exist. For instance, there is something called blockchain.
Yes.
People here talking around walking.
And Bitcoin.
It is about to make very many jobs irrelevant. Lawyers, auditors, accountants, people who do certifications. You're about all to become irrelevant. So if you wake up one morning, like my mother woke up one morning and discovered that there was no need for a telephone operator anymore. So her job was gone. It's the only skill she had. So what can you invest in that guarantees that you'll continue to be part of an economic activity that can generate resources that you can then invest and translate into economic activity beyond your labor?
All right. We'll come back to you, especially on how, the people in the corporate space can venture into farming profitably. We'll come back to that because everyone in the corporate world is thinking about farming, but they are thinking about it as an investment option to make money, to make sure their money kuzara.
That's when I laugh, but
Yes.
I'll tell you why.
Yes,
I
and,
laugh.
and I know this question I saw and I was quite intrigued because I know what it takes to make money out of agriculture. Keith, why is it that we have very few people investing in this, in the financial market space? Yet everyone out there would probably say this is the most secure space people should be putting their money. If they are not like Robert and don't want to get their hands dirty, this is actually the space for people who like to wear ties and suits and want to continue watching their money on their computer while they're doing their work. Why is it we still have very few people in this space?
I think it's really lack of awareness, and you can fault us or all the guys we license for not doing a good job at amplifying this message enough. But I've seen the trend changing. I know that about 5 years ago, there were only about 3,000 Ugandans who had opened up a security central depository accounts with the central bank and were able to buy bonds and treasury bills. Now they're about 11,500. Even the unit trust space, in 2014, there was only about 8 billion shillings in assets in collective investment schemes. Now it's about 500 billion. The number of clients is about 12,000. So there's growth. Small numbers, but there's growth. I think, especially even during these COVID times, there's so much economic uncertainty that we just saw, instead of the savings reducing to finance consumption, people were actually increasing their savings because they could no longer go to China and they could no longer go to Dubai to buy things, etc. So there's a growing awareness of this, and we believe that in the next 4 years, these assets will grow to about 2 trillion. There'll be a lot more Ugandans saving through the financial assets. So it's really about awareness, and so we're trying to. This is just part of it, and we hope that everyone who is listening can be an ambassador out there. There have also been a few unhappy stories. I'll talk about, for example, the time of the Safaricom IPO. Many Ugandans participated in that IPO, and they were a bit impatient. They were looking for quick returns. No one had told them about the cross-border currency losses they would sustain. The price was 5 shillings. It went down to 4. They panicked. Some sold, others bought. It went down to 3. More sold, others bought. Today, the price of Safaricom, Joram, where is it now? It's about 20. It's about 30.
Wow.
Look, 2008, time check now, 2021, 30. That's a compound annual growth rate of about 16% per annum. So really, equity is a long game. When you get into the equities market, you have to be prepared to play the long game. Don't panic. And let me just tell you a little story. My first time I bought shares was in a gold company in South Africa. The price was 12 rand. It went down to 9. I called my broker in a panic. And he just shouted at me in the phone and just said, buy more. Now, I thought this guy was a bit
crazy.
nuts. Now, that when the share crept back to about 14 rand, I sold and it's like, whew, I've gotten back my 2. At least I made a profit of 2 rand. Then I watched every week the price was going up. It got to about 51. And I didn't know whether to get back in. But that was my first experience. As I said, this was 2000. So as time goes on, you get users. You start to understand the markets, the cycles. For example, what are we going through right now? It's a COVID situation. During economic uncertainty, money leaves emerging markets, goes to the developed markets into dollar assets. By the time will come when the commodity prices start to go up, you'll see money coming back into emerging markets. So it's a cycle that you need to understand. But I keep going back to the fact that on your own, you've got a day job, you've got a salary job, you don't have time to study the markets. Invest through those people whose job it is to analyze the markets and decide where to invest.
All right. And that's why I wanted to interrupt you, and I'm happy you concluded your point because it makes more sense in terms of where do I invest? Is it with the long-term investment in with the stocks and shares, or do I actually, thinking, okay, if I want to keep my money short-term, treasury bills is a great place to go. Medium-term, maybe a unit trust. Long-term, stock market.
Market, the 9 shares that we have listed. 3 banks, insurance company, New Vision, which New Vision has paid dividends every year consistently from the time.
And we want to congratulate Robert
it was
for that.
listed, except only 1 year. I don't know what happened that year, but
profit, so we didn't have anything left to.
So the beauty of equities is that, especially if the dividend-paying equities, banks always pay dividends. I think Stanbic has always paid a dividend. They've
Yes.
never missed. Umeme has never missed paying a dividend. Uganda Clays used to pay heavy dividends at the beginning, but now they've really gone slow. So the beauty of equities, if you get the right advice from a broker or an investment advisor, is that not only do you gain the capital appreciation, but you also get the dividends. Think about the banking model. Get your savings, those of you who are fearing to invest, lend it to the business people, invest in government securities, pay a few salaries and rent, and the balance is profit. You have to really manage a bank badly for it to go down. I'm not saying much more than...
I was about to ask myself about the managers of the banks.
Let's not go there.
okay. I mean, it happens. The economic cycles, and sometimes you can be unfortunate.
There's a young musician in this country who says,
All right, but the point is that equities are a long-term game. They pay dividends, there's capital appreciation. Sometimes the share price doesn't respond the way it should, despite the company is making profit. But overall, it's a good place to be for the long haul.
All right, Keith, thanks. Keith and Robert, we'll come back to you. I see the headmaster is back. I think he wants to do roll call. So I'll go back.
Can't we go on strike?
I think we're about to go on strike. You know, Robert, your group is prone on strikes. These young boys do not have time for strikes. They want to go and look at their phones. That's the most important thing. All right, over to you, Apollo.
Thank you so much. Thank you so much, Maurice. Thank you so much, Robert. Thank you so much, Keith. As you were talking, I got some texts asking, does Robert want to put coffee on our golf course? There is an uprising for the golfers. So he's wondering. And then I got the one from the other farmers. They were saying, now we can also equate ourselves with the golfers. We keep walking in our gardens. Yeah. 18 hole, exactly. So, Anne-Marie, please get ready for our second poll. But as we get our second poll, this is a time when we understand who is doing what right now. But also there are quite a number of questions. I have 100,000? Can I start investing in the capital markets? Can I get a loan of and I put it in the capital markets? But today, let me just give a minute to Joram. Joram is one of the market players. Just to tell us, you have just 2 questions to answer. Can I participate in the financial markets? If I have 100,000, can I start? If yes, where do I get the forms? Joram, please. As Anne-Marie, please displays that poll.
Thank you, Headmaster. Firstly, I would like to thank today's panelists, Mr. Keith Kalijira, a regulator, and Mr. Robert Kabushenga, and NSSF for driving the farmer, correct, at NSSF for driving the financial literacy campaign. Not to forget our moderator. To introduce myself, my name is John Mongura. I'm the Chief Executive of SBG Securities. SBG Securities is licensed by the Capital Markets Authority and is a subsidiary of Stanbic Holdings. So going back to your question, can I invest my 100,000 Ugandan shillings? I'll tell you with a big yes, yes you can invest. And for you, that 100,000, even if we split it, say, by 50,000, if you brought the 50,000 to our markets today, you could buy about 1,886 Stanbic shares at a price of about 26.50. If you decided to buy Baroda stock, you'd buy at 95, at the price of 95, you'd get about 526 shares. A minimum amount of shares you can buy is 100 shares. And the benefits of holding a share or being a shareholder is these capital gains that the regulators just mentioned, Mr. Keith Kalijira mentioned. We also have the dividend as well as the bonus and rights issues. If you like for you to start investing today, all you need is a national ID, a bank account, or mobile money account. And the reason we need the bank account or mobile money is for purposes of you to receive your dividends at the time the company is paying out a portion of its profits to you, the shareholders. Feel free. Thank you, Headmaster. To make sure I keep your work speak with the limited time.
Thank you, Joram. He's from SBG. Because we are NSSF, we are also mandated to tell you that there are another 7 licensed. Another 7. He's one of the 7. So we do not say he's our favorite, but he's the one who was in the room today. Anne-Marie, please end that poll and we see. So the question is, what type of investment instruments are you using right now? And from our panelists, We have the biggest majority doing business. About 28% of our participants are doing business. It's a multiple question, multiple answer, so the percentages will not add to 100. We have about 23% doing bills, bonds, and fixed deposits. 25% doing shares and stocks. Unit trusts, about 28%. Agriculture, 26%. Consultancies, 13%. Others, 9%. So pension funds, we are at about 13%. So someone could be doing 3 or 4 things, but that's the popularity of this. Over back to you, just to inform you, Joram comes from SBG, and we shall be sharing their link shortly, so that if you want to invest, you can actually reach them directly. We shall be bringing all the other market players as and when we have chance to. Back to you. The others are on the CMA website. Yes, I've been
Capital
reminded.
Markets Authority website.
Thank you.
Thank you, Apollo. Thank you, Headmaster. Robert, let's begin with a very interesting question. So someone is in the corporate world and they want to venture into agriculture, and they're saying to make, to go into agriculture and make a profit out of agriculture.
Somebody with that attitude is doomed.
Okay.
Yes. Look, let me sort of...
That worries a lot of people in the corporate world.
Yes, because I want people to come to my world where I am with the right
Attitude.
mentality. If you are looking to make money, and some of them are looking to make quick money,
Yeah.
there are enough sports betting shops in town. You go there, you will make very quick money, and a lot of it. But you can also lose everything. So what Keith said about having the long view is true for financial instruments. It is true even more for farming. I have a friend who, because we didn't discuss, I cannot disclose his identity. But his parents had sufficient long-term view to plant coffee. And they planted a huge acreage and invested in a processing capacity. Today, his parents are dead, but him and his siblings are exporting processed coffee to the US. Now, talk about a long-term view.
This is second generation now.
Yes, because the jobs we have today, employment is not going to be the way it is. Me and Keith, when we left university, we sampled...
Jobs were waiting for you.
We sampled employers. You
Yes.
go, you don't like the way this office looks, you leave, you go to the next one.
Yep.
We sampled jobs. Even when we were working well on campus, we were being
Yes.
paid. Today, people on campus work just to be able to do something. They're not being paid.
They're asking for free employment
Yes.
to get
some
experience.
experience.
Yes.
So, have bigger reasons why you come into farming. So, I've gone back to a family tradition. My grandfathers both grew coffee. I'm going into farming because hopefully I can pass it on and the kids will be interested when they are of age. If they are not, worst case scenario, they will flog it, get the money, go to Keith's world of financial instruments. Either way, we have, those of us in the corporate world, have had opportunity to climb socially. So use your current position and money and invest like that. So don't come to farming with, so let me, I've taken long to answer.
No, it's okay. I get it, because it's the same as investing your money in the stocks.
So money in farming is not the objective. Money in farming is a consequence. It's a consequence of certain farming objectives. For instance, I want to produce the finest green beans of coffee Robusta in Uganda and have a good name and be a premium guy. What does that mean?
And we are hearing that, by the way, the given the weather patterns and climate change,
Yes.
the coffee
we may
test.
be very few. We may
Yes.
be very few of
So
us left in the game.
Yes, you might be very few. Especially Africa may actually survive this because our friends in Europe and of course
And we have
South
you
America.
see, but we also have varieties
Yes.
which are robust. That's why our coffee in the Central Region is called Robusta. It's robust. But my point is, you go into farming with a bigger objective. You want to produce the finest pigs you can breed. You want to have the finest beef. You know what that means? You will never have to walk out of your farm a day to look for a market. Because guys will know. Somebody told me, by the way, no person in the world has ever won an argument with their stomach.
That's true.
So that market is permanent. So if you want to make money, Don't do the numbers that guys do on Excel and they say, you know, if you have this number of matoke and you sell this, you will make this, it makes money. That's not the point. The point is, if I can produce consistently an 80-kilogram bunch every 2 weeks, I will have trucks parked outside and I will name my price.
All right.
That's how we make money.
Maybe let me ask this question, because I wanted to ask it to Keith, but I remember you spoke, very well about the impact of COVID and why, if you're smart right now, you'd be able to see that the sectors that were not affected by COVID. I like that argument, and maybe it would be nice to share that if you're in a sector that wasn't affected by COVID, then you're in the right investment. You made the right investment
This
decision.
observation was made by a friend of mine, and she said, I'm going into business and I'm investing in the sectors that were never closed during the lockdown. Now, while you guys were shut down in your houses, we were busy going to our farms and selling produce. So, whether it does not matter what type of crisis, even war, people will eat food. What's very interesting, by the way, is that right now, people are still lodging claims for food that was commandeered and eaten by NRA rebels. This is 30 years later. Yes, there are claims there in the Ministry of Justice.
Very true.
So come into farming. Now, here's another reason why I would encourage corporates to come into farming. We come with certain advantages in the farming business that have not existed before. One is what Keith talked about, ability to do the numbers,
Yep.
ability to plan, ability to get knowledge and process it and use it. Where you see, a lot of the smallholder farmers and the rural types are very superstitious. So they say, when I started planting matoke in my area, they told me in Luganda, they said, "Nomuzeye nsuku zafa." Now, there is a misconception that matoke, banana plantations in Uganda don't last,
Yep.
that it is a Uganda problem. No, it's a very simple problem. Baganda don't keep a lot of livestock, so they don't have sufficient humus to keep the soil texture, and that's the only reason why their crops fail after a long time. I was telling Keith Welu in the car coming that one of the biggest challenges about our farmers is that they don't replenish nutrition in the soils. We harvest and we just keep planting as if the soils don't get tired. They'll get tired. So when you have knowledgeable people, then you apply science. Then you know that a pig is capable of giving you piglets 3 times a year. The reason it's giving you 1.5 times a year is because you're not feeding it. You think that a pig is supposed to be sleeping in mud and eating anything. That's how the pig gets worms and fails to give you. Then you go to Europe, you find a pig which is sleeping with the music playing, and you wonder why they're doing it. So that's the point. Why is it that a cow in Europe can produce 30 liters per milking and ours produce 10? Why is it that European chicken can give us an egg every day, 1.5 eggs every day, and ours give us 1 egg per month? Those are the questions to ask. Once you start asking those questions, you can make it science.
All right.
So corporates, please join us.
All right. I wanted to ask the same question to you, Keith. What was the impact of COVID on the financial markets? Because if I wanted to invest in the financial markets, I need to worry about the next threat to the different economies, the global economy.
So Robert mentioned food. That's a given. Communications. I mean, we saw what happened in the Zoom share price. Teams, all these things that were starting to come up. Those are sort of defensive stocks. The health sector. Whether you're a medical practitioner or you're a pharmacist or you're a manufacturer, those are sort of things that have to keep on running. What surprised us, I think, the most was education, because generally in economic downturns, education is one of those defensive areas because people tend to skill themselves more, trying to improve their ability to earn a better income when things change. But this time, education took us by surprise. But it's normally meant to be a defensive stock or a defensive sector. So those are the main areas that really survived the pandemic.
But even those that
Maurice,
didn't survive, yes, Robert.
Sorry, before we leave,
Yes.
I was reading somewhere, and the guy was comparing 2 responses to COVID. That some people became despondent, shut down, and went and started spending a lot of time on Netflix.
Yes.
Others saw the opportunity and concentrated on the things so they threw their energy into it. So what Keith was saying, they were able to see that stocks were dropping and they went and bought.
Yes.
They
Actually,
didn't look at stocks dropping and
I
start
think you
crying.
were looking at my question, because that's the question I wanted to ask. Because I wanted to say it actually became an opportunity. The financial markets became an opportunity during COVID.
I have another friend.
Yes.
And these are really powerful stories. So I have two people I know.
And I can imagine whoever is benefiting on this.
This guy, the moment the president announced the lockdown, which was on the 30th,
Yes.
I think he had had wind that there was going to be a lockdown. So his things were packed. As soon as the president announced,
Village.
he got his kids, tossed them in the car, everything, and drove to the village. That guy, who shall also remain anonymous, has just planted a square mile of cassava and is going to do ethanol. So the time, he said, if I had stayed in Kampala, run up and down, so for him, the lockdown freed him from the obligations of Kampala, and now he's just a visitor in Kampala. Another one I know had just arrived from Kenya with seedlings for coffee when they locked down Kenya, and then they locked down Kampala. He went to his village in southwestern Uganda, 100 acres of coffee. He planted and finished by saying lockdown. The rest of you were here on something
Zoom.
called the heist.
Yeah,
was something called the
a
heist.
series called The Heist. Yes,
everybody
yes.
was.
It was on Twitter. I thought there were some thieves in this town.
Yeah, I was wondering, there was people there watching.
Yes.
So you can see the difference. There were those who spent their time doing something. There are those who used that time. Some of them did online courses.
Yes.
And they have acquired the skill.
And
Keith,
they've
you finish.
graduated. Yes.
I'm a Harvard alumni during the lockdown. I mean, they were able to get all these Princeton and Cornell courses online. So it was also an opportunity for people to upskill themselves.
Maybe the question for you, Keith, then would be, isn't it an opportunity when you have COVID and other, related crises? Wouldn't that become an economic opportunity for investors, especially in the financial markets? You actually reap faster in the financial markets when you start seeing a crisis.
Yes.
We saw what happened with the shares, especially the airline shares globally. We saw what happened with the oil prices, and because then also the opportunity around Zoom, those who had especially the shares in technology companies.
Yeah.
Yes. Wouldn't that be a smart place to be when you are you're looking to where to invest during a crisis?
It is indeed, because the world always goes through cycles. I remember at one point in time when I was working for Shell in 1998, the price of crude was $10 or $11 a barrel. And we're thinking of $35 as something, unimaginable. Those were scenario forecasts, $35 per barrel. At one point, it got to $120 per barrel. And this was because of, partly because of the crisis in 1998, the financial markets crisis in 1997. So indeed, there are cycles. If you look at the Kenyan stocks, and the good thing is that most of these exchanges published the price of 1 year ago, 52 weeks ago, and you're able to see what the price of, I don't start sort of selling stocks here, but there's some serious decline in some of the counters. Previously, which seemed to be unaffordable, were now a quarter of the previous prices. Now, at that point, everybody's in a panic. The typical mindset is that this is a bad time. This is a bad time to invest. And yet, indeed, it might actually be a good time to think about the fact that you might be at the bottom of the cycle.
No, it starts with, this is a bad time.
Yeah.
You're going to die. You become
Yes.
despondent. It's such a bad time. That's where it starts. Then it translates into the investment. And that's how everyone loses out.
It turns out into an opportunity. And maybe, Keith, that's where I wanted to ask, especially around the risks involved in investing in the financial markets. If you could point them out so that any young investor in the space begins looking at the risks and learning early that these are the pointers and these are some of the risks you may want to worry about.
Now, if you're going to go into equities, again, I think the main issue really there is valuation. Are you investing on a whim just because you think Kenya Airways is a fantastic airline because you've traveled on it a few times? Or are you investing based on the analyst reports? And these guys with license always produce reports. They're hard valuers. They do technical analysis, fundamental analysis, and they come up with typically 15, 20-page reports with a conclusion at the end. Either hold, buy,
Or sell.
They rarely say sell. They don't be polite. They don't just if they don't, rather than saying sell, they say hold or long-term buy.
That
That's
should be a
polite way of saying
pointer.
it. Yeah.
That should be a pointer.
But there's sometimes when they're very clear and they say, we think this stock is undervalued by 40%.
Yes.
Now, if you compare 2 or 3 analyst reports, you have your answer. All you have to do at that point is decide whether you want to believe these reports and get in.
Isn't that how Warren Buffett has made his money? Just
Yes.
reading those reports.
Yes. Having the perfect advisors. Robert, this is where I wanted to ask, and Keith will probably also answer this question. So you speak to a space where, you know, a lot of people are going to put money they've earned, you know, over time. And so maybe even the fact that they gradually invest in this space. So they begin with the land, and then they start looking, if they don't have social capital that you were speaking to, especially from their existing jobs, they start looking for capital, which in this country is not very cheap, to invest in this same space. And yet, Keith is speaking to a space where there must be, and he told us at the beginning, his space is about people with money, trying to find where to put the money. And also his space with people who want the money and are looking for where to find the money. Is another space we should be thinking, if you want to make your money productive in agriculture, in manufacturing, where do I go? We still have to go to Keith's office. Do you see yeah, Keith, you could begin this
By the way,
conversation.
Robert,
It's a cycle. I was thinking.
Rugeyo Farms could one day decide to do a private placement,
Yes.
right? If they had expansion land, or they wanted
Yes.
to expand, right? If they wanted to add value to their...
To the coffee, he wants to add value and make, you know.
All he has to do is bring his prospectus to us, and
Yes.
we give a no objection to make sure it's not a public offer. And there you are, and that's how capital is raised. The only thing that is, people ask the typical questions: does he have books of accounts? Does he have
Yes.
a track record?
Yes.
Who is he? In case he pops off, what happens? Is there some continuity behind him? Those are the typical questions. Is he the sort of guy who's going to get this money and say, I'm going to buy a plant to process my coffee, and then he goes and buys a flat in Bahamas?
Yes.
Use of proceeds, big risk, in addition to the valuation risk. So once those are clearly pointed out and you've got a credible board of directors, it's very easy to raise capital. There's more than enough capital in the world looking for good investments.
Yeah.
And in fact, the problem is not just about the absence of capital. Sometimes it's just the character of the entrepreneurs. We always think that money is the biggest problem. But sometimes, and we're just listening to Charles Ochichi today in Parliament giving his pitch about enterprise development. But it's really true that it's important that we are able to improve ourselves, package ourselves, and be believable and credible. You're talking about social capital and whether you're credit worthy. Those are very important attributes. You're able to even command a higher valuation for your business if you're organized, if you're credible, if you've got a good board, you know, overseeing your activities, if you're authentic. You're able to get away with even a higher valuation when you go out into the market, trying to value your business, as you're trying to raise capital.
All right, Robert?
I want to tap into Keith's mathematical genius, even though it was in the past. That's what he says. But I mean, when you're like that the rest of your life. Keith, mathematicians talk about something called being asymmetrical. I don't know if you can break it down in layman's language, but the way I understand it, Keith, is things which are asymmetrical or people who are symmetrical, they don't follow the ordinary rules. So some lines will be longer than others. It's not the ordinary thing. So, in this game that we're talking about, when you're making choices and decisions, it pays to be asymmetrical in your thinking. People in this country don't invest in thinking, in original thinking. There's so much imitation and following crowds. You see, if you find a crowd heading somewhere, my advice to you is go in the opposite direction, because there's probably space that has been created and left redundant. So you'll have more space than you need. If you find a crowd going in there, you get out, head in the opposite direction. Why am I saying that? You know, there's in this country we don't write, but I wish somebody would write the story of flower farms. What failed the flower farms, I have asked a few people. They went to Kenya to do benchmarking. They benchmarked the wrong things. They benchmarked the consumer patterns of Kenyan farmers instead of the production patterns. So when they got financing, they all bought a luxury car like the one they saw on a farm in Kenya. Some of them married a second wife. So they took the consumer aspect and forgot the production aspect. And so they failed disastrously. There were also other issues, but part of it was just sheer lack of discipline. So what do I mean by asymmetrical thinking? And original thinking, which is asymmetrical. When in 2015, when I started my farm, well, it hasn't yet reached the financial level where I want, but it has promise. A very prominent person in this town asked me, where are you? I told her I'm in the farm. She said, nze nkwate sente zange zenkoledde mu Kampala. Ngende nziteeke mu ttaka. Nziziike eyo nveeyo. Now, you're not going to farm by putting money in the farm and coming back to Kampala to play golf. No. If you're going to put money in the farm, you're also going to take your life and leave it there. Muzei Sekalala is the one who put it for me very, very graphically. He said he borrowed a significant amount of money in 1974, bought a farm, and then he woke up one morning and he was in a flat in Bukoto, and he said, I have just put my children's inheritance in a bush. What am I doing here? Told his wife, Park, you and your children were going. And he has not come back. That's over 40 years ago. So you're not going to put money in a farm in Ichenjojo, then sit in Kampala and start calling the farm manager to find out. So be asymmetrical. If you want to put money somewhere, do what the other people don't do. Because the general thing is to, let's all go for umeme and we buy. Or let's all go for Stanbic. They used to call it the ATM at the time of the IPO. A clever guy is looking at you fellows and saying, these are going to do IPO. And then they will sell on day 2 years. Me, I will stay for 4 years.
Yes.
And that guy is laughing at all of you who rushed because you are following a crowd. In these things, have your own agenda and be asymmetrical. I don't know how to explain that issue. But for me, when I went, the time I went, everyone was going
to jump it,
to
the next day.
campaign for public office.
Yes.
And everybody thought that I was going in for campaigns. Me, I was just laughing. Because the amount of money they were spending per week on campaigns is what I needed to sink a borehole. I sank 2. Now, for them, they sank the money in campaigns.
Never, no return.
So, really?
All right. We'll come back to this. I just thought we would look at some of the questions that people have shared for both of you, Robert and Keith. This one is for you, Robert. How can someone start out farming in the corporate world and succeed? You've spoken to that. To you, Keith, what are these licensed farm managers and how can we get in touch with them? You mentioned we can go to the website, the Capital Markets Authority website. You want to add some detail?
Capital Markets Authority website, and you'll see all our licensees there. There are 5 unit trust managers. That is ICA, Britam, Sanlam, Zeno, and UAP. I'm always accused of forgetting one, but there are 5 of them. Sanlam has indeed started, so those are the 5 fund managers, and those decide, help you decide where to which kind of investment to go into, depending on your risk appetite, depending on your age. People who are past 50, and fortunately there are very few who are listening, will tend to be more defensive. They wouldn't go into equities, which is long term. So those will typically go into fixed income or umbrella funds or money market funds. But those who are younger have more time to correct. In case equities go down, those can easily go into equity funds, but that will be the preserve of the fund managers.
All right. Jerome spoke to this. Cyril, who is asking if they had, it's Arnold Samogero, who said if they had 200,000 and they would love to invest in the financial markets. Jerome gave you an example of 50,000 and where you can actually put it. Cyril said something, Robert, which I thought both you, Robert, and Keith can speak to. With governments, yes, Keith.
There is a caution on what Jerome said. I know, Jerome, you're politically correct when you said 100,000 was the minimum. But think about the dividends. If you bought shares worth 100,000 and you're going to get dividends of, say, 15,000, think about the bank charges, right? So be careful as you talk about these minimum amounts. The reality is that it might sound good in theory, but in practice, the dividends have to be more than sufficient to cover the bank charges, unless you're going to be receiving the dividends via mobile money. And this is a space that the fund managers and the issuers, the listed companies, need to seriously think about, because there's so many unclaimed dividends because people bought in small quantities.
Oh, well, now that's some homework for the fund managers. Cyril says to both of you, Robert and Keith, with government's travel restrictions to limit the spread of COVID, is investing in second residency or passport could be considered as an alternative investment? Second residency. I don't know why they think...
What is second residency?
Where you have more than just one and a New Zealand passport. So your investment is dependent on where you believe there will be a better return to your labor.
But I think this country needs prayers. I'm very serious.
Maybe let me add this. She says, if we cannot move freely and meet clients and partners abroad, could this not be a major threat to income growth? I don't think so. With digital transformation.
Yeah. Okay. I have never boarded a plane or a car to go anywhere to talk about Urujeo Farm, its coffee or bananas. Never. The other day, Alan was interviewing me about it for BBC. Did I go anywhere? I am here. I am restricted like everyone else. COVID tests, you can't travel. But my story is going out. But I think that the problem we have, this has been made worse by social media, is everybody is trying to find the thinking and the mentality in this country. People are just not serious. We're making tough and hard choices about our livelihoods and the livelihoods of our children.
Yes.
Now you're talking about second residency.
Second residency.
Well, what is that? We're talking about how can we be productive? How can we make our money generate wealth for us? These are serious matters. And so please don't trivialize. Actually, it is called vulgarizing a debate.
Keith?
Let me just express some sympathy for that question.
No.
I think Robert has-
Keith, maybe the point would be, if you're trying to make an investment decision, especially on the financial markets, am I better off thinking my other second residency than my local residency? Is my money safer in the Europe Security Exchange, or is it safer on the Ugandan Stock Exchange?
Well, I think just from a point of view of exposure to more alternatives,
Yes.
there's nothing wrong with being able to invest offshore.
Is that what
if
the
you
person
can.
meant?
No. I'm just.
If you can. Now, I also
I
know
was
that-
trying to. No, I don't know how you want to call it. I was trying to sanitize the question. Maybe.
but there have also been cases where Ugandans hold a second passport just because it's easier, especially if you're a heavy traveler and your business or your profession requires you to keep moving around. There are times when a second, Western passport does help you avoid the queues for visas, etc. So yeah, there's a place for that, if depending on your profession.
Right. Grace is asking, what licensed unit trust funds or collective investment schemes in Uganda? I don't know where you should say what are, or maybe she wanted the 8 listed licensed unit trust funds. Yeah, I think.
I did mention them earlier.
Yes.
The 5 listed: ICA, Britam, UAP, Zeno, and Sanlam. Right.
All right. Keith, is a salary loan of 10 million advisable for me to invest in mutual fund compared to Robert's option?
No, don't borrow to invest. Don't repeat.
Thank you,
not
Keith.
borrow to
Thank you,
invest,
Keith.
especially
Thank
if it's
you.
a startup.
Thank you.
I like these short answers. They allow me to squeeze in more questions. Frederick, I have a question for Keith. Why is the financial market underperforming in Uganda? Is it really underperforming? That's a good question. I'm not so sure. I have a return on my money market. I'm not so sure it's underperforming.
I mean, which market is going to give you 12, 11% consistently?
Not Robert's farm, at least.
Maybe Robert's farm can give. I don't know if he has the computations.
You'll be there. It is okay. You stay with your skepticism.
But I think underperforming from the perspective of the fact that there are few alternatives to the 9 shares that are listed.
Yes.
That's a valid point. And we're trying to see, to really make people realize that they can raise what we call market-based financing or non-bank financing to finance the growth of their business, to get short-term working capital through commercial paper, to issue bonds, and that will give more Ugandans an opportunity to invest in the financial assets. And we're really looking at our intermediaries, because these are the foot soldiers, they're the rainmakers. It's their job to get companies to issue more securities.
Yes.
And I know that many businesses don't want to share their profits, and they prefer to remain private. There's always a feeling that when
That's
you go
the
public,
question she was leading to, and I thought maybe I would complete it for you to be able to add that. We haven't had an IPO since CIPLA. I would suggest we have a mandatory listing for companies making a certain cap of revenue in Uganda.
I don't know whether
Robert, you want to come in
from
before
a
Keith?
capital. All right, go for it. Robert.
I'm really a non-financial guy, so I'll just say this.
As somebody who managed a public listed company.
Yes. I think that sometimes we need to be conscious of the fact that we live in Uganda. Some of us live in Uganda with an American or UK mentality. And we have very high expectations of our markets, our financial markets, as if we are living in a very efficient economy and so on and so forth. And Warren Buffett says it very perfectly. He said, I was lucky to have been born in the United States at the time that I was born, because then I can do my wealth creation through the stock markets. But if he had been born in Moldova or in Mongolia, even with his genius, maybe he wouldn't have made money in the stock market.
True.
So we need to understand that our financial markets have their limitations based on where we are in the world, and not impose Western level economic or developed market economic activities with ours.
Listings of companies that have exceeded a certain revenue, I'm not sure that is how it aligns with the free market forces and free movement of capital. It's not bad for companies to come voluntarily, but I'm not sure it's a good idea to make it compulsory. They can be encouraged. There can be licensing conditions like they were for the telecom sector. Every government has a right to attach conditions to licenses they give out exclusively to a few businesses, but compelling them to list might not be a fantastic
Plus,
idea.
Keith, in addition to that, you also need to look at the real history of our economic activity. Most of our businesses are family businesses. And so there are family dynamics there of going to the market. There's a lot of, the family dynamics are really difficult. The biggest enterprises that would be available for this kind of thing are state-owned enterprises. Is the state ready to do state capitalism? There are dynamics there as well, because you have some of those companies are really for patronage. So you have too many dynamics that need to be looked at before you can push that kind of outcome.
But having said that, I'm aware of some family businesses that are sort of on the way coming. They're quite excited about the whole second generation and third generation transition.
Yes.
And they see the capital markets or the exchanges as
an
one way
opportunity for
in
growth.
which they can diversify shareholding and sustain their success.
Because you look at going to borrow at 27% and taking out equity. But their families they don't have that emotional attachment of saying, I am the man with the vision. Like me, I have a lot of emotional attachment to my farm. My kids will probably say, Dad, we can keep 50% if we can. That kind of thing. So,
Keith, Darius speaks to an area we spoke to before, and I think I was engaging NSSF on this, and I really want to thank NSSF for providing a platform through their financial literacy, office, to be able to provide this kind of information to the people who are joining us. And Darius says, regarding awareness, do you have interventions where financial literacy trainers can work with you to have or to get accredited to drive awareness on your behalf, especially through trainings and much more? And I hope Apollo can share these details with you.
Darius, please visit our offices. We have an investor resource persons program. We want to expand that to even include a program that Univision used to run about the best teachers. I'm sort of unveiling a plan that is still in the works, but we want to use the best teachers in the country want to get them trained in being able to disseminate this message. I know this is being done in India, but we want the more foot soldiers we have to spread the message, the better. That's the only way we're going to really see more and more Ugandans learn about the financial markets.
Keith, I would also like to challenge you. Can you take on the Curriculum Development Center? They have a course, a subject called entrepreneurship. I mean, what are they actually teaching people? And I think maybe we need to just break down this whole education system. I mean, if somebody had taught me about money long ago, I wouldn't be sitting here. It's just, but
you would probably be in the Seychelles.
Yeah, amount
sipping coffee.
The amount of energy invested in teaching people about the French Revolution. There is no coffee studies in Uganda. There is no cotton studies in Uganda. There is no banana studies from the very basic level. Half of the guys who work in my banana plantation, they've acquired their knowledge by working in a banana plantation. Why aren't we teaching people how to grow bananas? Because that's how money is made. Money is not made by Louis XVI.
I had to give that a moment of silence. Anyway, Keith, let's come back to some questions. And I'm really happy because there's so many questions. I'm literally filtering through the questions. How much minimum capital, I guess, is what they wanted to ask. Can I begin with to invest in the financial markets?
I think Joram touched on that, and I did supplement on that yes, it's a good idea to invest. Actually, when you have got small amounts of money, don't go directly into bonds or shares. Go into unit trusts. That is really the best way of investing.
Begin building the building blocks.
Because you can have a debit order from your bank to the unit trust manager, 100,000 shillings per month. Now, 100,000 shillings is money you could lose. You could give a relative who's lost someone, who's going to get married, etc. But if you just get the discipline of putting aside 100,000, 200,000 shillings every month,
The ones who are watching us, that's what they drink in one sitting.
Yes.
there you
No,
are.
in one sitting,
I
in
don't know what
one
kind of
minute.
company you keep, Robert, but
Just one order. When I look at some receipts these days, they worry me. Keith, I wanted to actually ask this question, and we spoke. I was speaking to Jerome before this. The fact that you can actually use your savings in the financial markets as security, because most of us have learned that security is a physical structure, is a building or land when I go to the bank. But I've actually been advised by my bankers that I could use my security as collateral
yes,
and actually borrow against my security.
yes.
While my security continues to make me money, I'm actually using money to be able to invest in another
there you
productive
are. So
venture.
it's not just land titles that can be pledged as security or collateral for loans. You can use your depository account in the central bank, or even with the exchange, the Uganda Securities Exchange, if you have shares there. Because I think all that has to be done is that a lien is put on your securities.
Yes.
During the time when they've been pledged as security.
Yes, and not many people would actually have known that. I don't know if Robert knew this. Robert, did you? Because you might be using your land as collateral, and yet you could have used your New Vision shares
But
as collateral.
I also learned, again, through working at New Vision, it wasn't my own borrowing, but the New Vision's borrowing, because we used to borrow money, is that you can actually push for much lower interest payable on the money you're borrowing if you have liquid assets. Like, at one point, we held a fixed deposit, but we didn't want to break it, but we needed financing. So we decided to borrow, and we were able to leverage the banks down to an interest rate much lower than what we were being paid on our. So we were the cost of the money was lower than what we were paying for our what we were being paid for our fixed deposit. So people need to know it's not just enough that you have liquid assets, but you even have a much more stronger bargaining power, because you can say this security, you can realize it without any cost. So why are you charging me the normal rates? So it gives you bargaining power.
All right. Yeah. Keith, there is another way some people have used the unit trust and the money market to actually keep themselves self-employed. So you have people who've retired and have moved their either provident fund or their NSSF savings into a unit trust or a money market. And what they've done is that the order on the account is that the profit or the interest on the money every month goes to their bank account. So the same amount of money she used to earn as a salary, and sometimes for them even more, comes to their bank account monthly as salary. Yeah. And so their lifestyle doesn't even change, but their principal is still on the account.
Well, I think Adolf did touch on I think it's in the NSSF bill about to be signed, the value of being able to draw only about a third of your savings and leave 2/3 and draw this as a monthly pension until you die. There have been so many stories of people who have drawn money as a lump sum, and within 2 years, they don't have any of their savings. So it's really advisable, and I think Bank of Uganda did this for their provident fund, where they realized that many of the people were retiring from the central bank, were taking lump sums, and within 2 years, you're almost embarrassed to say that these were their colleagues. So they came up with a system where they're able to only give a third of their savings and pay out the 2/3 as a monthly pension.
Yes.
And however small it is, whether it's 800,000, a million shillings, it is something that you're sure of, and it's going to come into perpetuity, as opposed to you trying to become a business person at the age of 60. What's the likelihood of success?
Yeah.
First, I want to tell people, this, what Keith is talking about, this cash saving, this NSSF and so on, this is a nest egg. It's not an investment.
Yep.
It is what they call in Ugandan language kamane. It is just there because something will happen that will require
all of it.
So don't look at it as your investment for later, and don't take it out pretending that you want to now go and start a shop.
Yep.
The other thing that Ugandans need to do, especially my friends in the corporate world, when, like me, your life and work in the corporate world ends, please immediately, there and then, start downsizing. Because you must, when you are a CEO, there are things you do. You go and eat in a big restaurant.
5-star hotel.
The
breakfast.
The shirt you wear
must be dry cleaned.
Aha.
Yes.
Now, when the people say, by the way, you bring back our job, what? Ha. Now, Because what will happen is if you don't reorganize quickly, your cost of living remains at the level at which you are when someone else was picking the bill. You make unnecessary trips because the fuel is on your company.
Yes.
But now the fuel is coming out of your pocket. You must think. For me to drive to Mujisha's place, you see, I told you that me, I carry now my...
Your calculator.
No,
Yeah.
I am
thought you
on
carry-
this phone, the smartphone.
Yes.
When I find Wi-Fi,
That's what you
which
use.
is free.
Yes.
But
Because
otherwise,
before there was free airtime.
now this is my phone.
Yes.
It is very simple.
And you
Long
don't-
battery life.
yes,
I
you don't
talk.
worry about when it falls down.
I don't have to go on social media
Yeah.
because now I need to free my mind.
Yes.
So you need to quickly. Then you won't have the pressure to come and get your money out of NSSF to maintain.
keep your lifestyle.
Yes, because like now we are here. Keith is still CEO of CMA, so he must be in a suit and
Yeah.
me. Where do I have to wear a suit for now? For what? Stop people for that. What am I trying to prove?
Robert, I don't have a lot of time, so let me quickly run through these questions. Doreen asks Keith, as a Ugandan, can I invest in the Nairobi Stock Exchange?
And many of our licensed brokers have relationships with brokers in Tanzania, in Kenya, so it's easy to.
Benson asks, if I wanted to buy shares per month, where do I run to? I don't think, first of all, it's advisable that every single month you're turning it into, so every time I have some liquid cash, I run and buy shares. Every time.
I think.
What would you advise?
The advice would be to, if you want to basically get exposure to equities, look for a fund manager who has an equity fund, and invest and do that monthly, debit into the equity fund. Now the fund manager will
And they
decide
can invest it for you.
when they're going to switch from one share to another, and they can do the investment for you.
All right. From Sache, hope we can hear more about financial instruments, specifically how they work, and what is favorite for short and long-term returns. I think if you've been with us, you could have had quite a bit on this. What would work for you long-term, and what could work for you in the medium term? Robert, we are really running out of our time, and we may begin closing remarks. I'm surprised you never asked for more coffee, because I keep seeing Keith look at his cup, hoping that there was more coffee to pick it up, but he can't. Robert, let's discuss portfolio mix, and I wanted to start with you because you discussed this with us before. What would you advise the right portfolio mix? Especially, I've seen a lot of people go into land, people go into real estate, and those are very heavy on capital, and then those who've gone into the financial markets. What would be the right portfolio mix, or even agriculture?
Keith might arrest me because then I would be behaving like a financial advisor who is unlicensed. I would just say, have a saving, have an investment which gives you income, because the saving is for a rainy day. So have a saving which might be either financial or an asset, then have an element which generates regular income and also allows you a bit of activity. But also, please cut back on eating. Don't eat all the time. Don't eat everything. That is the mix that I would give. That's as far as I will venture in the advice world.
All right, Keith?
It's good to have, but you see, when you have an income, you can afford to have an asset that is not generating an income until you stop earning that income. That's when you need an income generating asset. But while you have an income, it's good to be able to convert that passive asset, like a piece of land, into something that generates income, and don't try and do it after you've stopped getting a regular income. So start preparing for that time, 15 years in advance, 10 years in advance, because the certain professions, however good you are, as Robert said earlier, when you get 55 or 60,
Yeah.
you have to stop. Unless you're a doctor in your own practice or a lawyer in your own practice, those work until they can't write anymore.
Yeah, but even the doctors, after 60, you literally are a consultant, and there's very little work you're going to do in terms of physical work as a doctor. So you'll become an advisor of sorts. And so you may stay in employment, but you're not going to be as active as you were. So your return, in terms of if it was the investment you made because of the amount of time you put in your job, may not necessarily be the same as when you were 35.
True. But having said that, I don't want to, I know we're talking financial assets, but I don't want to trash the dynamic of land in Uganda. For some reason, land has been a very interesting investment. And there's still a few stories of some really interesting returns, depending on where you buy it and what you're going to use it for,
Right.
commercial land, etc. So it's not good to just buy land at random, land in the middle of
There's
nowhere.
speculative land buyers.
It's
Or
important
the
that you-
oil road is going to pass here, so we're going to buy.
You buy a swamp.
Yes, and you end up buying a swamp. One minister said, "What is a swamp doing in the city?" So people bought swamps. Robert,
He also said, does he look like a crocodile?
that's interesting. Millennials are wondering who these people are, but it was our time. It was our time. Robert, somebody's asking, and I think NSSF has already been doing this. How can we support upcoming farmers? Do you entertain demo farm services? Can NSSF arrange for its members? Before you come in, Robert, I know that NSSF, through the Friends with Benefits campaign, does run testimonials of different NSSF servers who, when they get their money, actually invest it in different portfolios. Most of them are actually go into farming, or at least reinvest their money in farming, because they've already been doing farming. And there's been great stories, and I'm sure NSSF would be happy to take people to Ruggiero Farm and also some other NSSF members' farms. Is that something you're open to, Robert?
No, actually, well, yes
No,
and
we
no.
paid Robert
No.
to go into agriculture for a very long time, so he cannot be charging us for services of visiting his farm.
I will not charge, but I am reflecting on it because there is an element that I need to pay attention to. It's called biosecurity. The more I'm running a huge risk, the more you people start strolling around my farm, you bring diseases and you might decimate my investment. But
That's true.
But I think one.
Well, you could do the option of, I know if you visited some president in the region who, before you enter his farm, you must disinfect your feet, and
No,
the
why
vehicle,
are you going
the
for the
vehicle must go through the disinfection infection process.
I went to a farm in the Chifuma of John Magne. I showered twice and I was sprayed. I was sprayed, yes.
Before you entered his farm?
He sprayed
Yes.
me and then I changed clothes.
Yes.
Then I showered
And you must
twice.
wear his attire, with the,
exactly.
and then they spray it, then you get in.
Then you get in.
Yes.
Then when you come out, you also bathe.
So it's a very expensive venture. So you
Yes.
must have really be large scale.
But what I'm saying is that I've been in this whole, I've watched the NSSF thing, we've done the best farmers thing and all of this. What we're doing is a drop in the ocean. What needs to change is a structural approach to the whole farming sector by the government, so that there are certain risks they need to take away, which we are meeting. That will make farming affordable. If you've got agronomists available, if you've got extension workers, if you've got roads, if you've got regulation of inputs, and people are not importing counterfeit hose. Do you know there are counterfeit hose in this? They're there. So if all
Counterfeit
those
seeds, everything.
what,
And drugs,
If
yes.
all those things are taken care of by the state, that already takes away 55% of your risk. Regulation
Yeah.
is all we need.
So the sector is not necessarily unregulated. It's
It is-
regulated, but
You know
people
that-
are beating the system.
No, you know that I can't export coffee without a phytosanitary letter. So there is huge regulation. The people in charge of the regulation are just not doing their work.
True.
So when we talk about investment in agriculture, the countries that have made money out of it, like Morocco, Israel, they are very serious, very serious. The materials that you plant, you can't, in the Netherlands, you cannot start farming without a license. So, but here, a guy wakes up and he starts farming rabbits. So what we need to help farmers is at the level of the state, for the state to be interventionist. And they say, we're going to do this, we're going to do that, we're going to do that, and there is no fooling around with it.
All right.
Yeah.
Robert, I was just about to remind you that there is a musician who also began a farm. Some other farm he was talking about. That is another conversation.
But I
Again,
want to
millennials wouldn't know that
no,
one.
I
Yes.
know, but you go and on YouTube and look for there's a very famous musician in the US called Lenny Kravitz. He has a farm in Brazil. Just go and check it out.
Interesting. Keith, so portfolio mix, really. Somebody who's been doing work for about maybe 15, 20 years in the corporate world, but working for a great bank, he's paid very well. He's probably saved some good money, 300, 400 million. Probably has credit, his credit worth, like Robert was saying, is probably worth $1 billion, because he can actually raise about another $1 billion in the market, depending on where he puts his money. How would you speak to that kind of person? I know those are not so many. Those are not so many, especially if you ask anyone above five who was 500 million plus in NSSF. Those are also not very many.
So equities, real estate, fixed income or bonds, I would say equities about 15 to 20%, very similar to the NSSF asset allocation.
Yes.
Bonds maybe about 40%, and then real estate with a difference. But again, this is just simply because I recognize that the real economy sometimes generates a lot higher returns. For example, guys who import aluminium foil.
Yes.
You may find they make 40% per container. They do that 6 times a year, 5 times a year. That's 200% gross. So the reality is that business, the real economy generates much higher returns. There's more risk as well, because this is sometimes not sustained. But also, the reality is that if you're working, you don't have the time to be able to get engaged. So you have to accept lower returns because your time is paid for by somebody else. If you're able to get yourself invested in somebody who is reliable and does that business and can give even just half the return they make, that would be fantastic.
All right.
Some people do it through lending business people money and to get some of that return. But yeah.
All right, so we have a minute, and I see our headmaster is ready to take charge of his class. Robert, very quickly, your takeaway notes for anyone who's been joining us or who's probably just joined us halfway this conversation and probably missed a great conversation on where to put their money and why financial markets is actually a great space.
Your NSSF is a saving, it's not an investment. Invest in some activity which is productive that can make money for you, whether you are there with your labor or not, and cut back on gratification. You have eaten enough. If you are in a job today, you have eaten more than enough from when you were young. So it's now time to cut back and be frugal.
All right, Keith?
We've been talking about investing in financial assets, diversification, good point about delayed gratification, but also say invest in yourself as a human being. Raise your level of emotional intelligence.
Yep.
And self-control. Self-gratification is about self-control. That's one of the 5 tenets of emotional intelligence. There's a strong correlation between the most successful people in the world, whether they're CEOs or professionals, and self-awareness. Get to understand who you are. Get to understand what your strengths are. And harness those strengths to become a much more productive individual. That will raise your income, that will raise your knowledge, and give you the wisdom to make the right investment choices.
All right. Thank you very much, Robert and Keith. This has been really an exciting conversation. I probably learned more than I came with in this conversation, and I probably will be making some great money decisions in the next few months. I'm not so sure Robert, spoke about coffee, and I'm hoping he was wishing he could speak more about coffee and get as many Ugandans to drink Ugandan coffee. That would begin to support and and some way end up in his pocket in the long term. So I want to thank both of you for a great conversation and thank NSSF for allowing us to share this information with the rest of you. Over to you, Apollo.
That's Headmaster, sir. Thank you, Maurice. Thank you, Keith. Thank you, Robert. You don't leave the headmaster's class without an assignment. You have to give a book assignment. But before I get to that, your assignment, someone asked about NCDC. We need to take on a vote with NCDC. As NSSF, we have actually come up with content, financial literacy content, and we have dumped it on. There are some tabs NCDC is giving out for in the schools that can afford them. So what we have done with those tabs is before someone attempts any class or accesses any Hitler or any all the other subjects, we have automated it in such a way that you have to go through at least 2 pages of financial literacy before you proceed. And that we are doing on a small scale. We have started with the schools where we can provide tabs and also those which can provide themselves tabs, but we feel like that we dealing with the Capital Markets Authority, Bank of Uganda, IRA, UBRA will probably have a bigger success. So I take that challenge back to CMA and I say, please, let's have that. When it comes to, just to pick up one comment, someone said, Robert, you're making us feel jealous about the suits and the free lifestyle. People are about to drop their phones. And then about I want because I'm the headmaster, so I will not ask for a minute. So I will just direct to Robert. Kindly speak in 2 minutes. Speak about coffee, because we, as NSSF, we have an action cohort, and we are saying all members who want to participate in coffee, please come and let's get together and see those ones who are threatening, those ones who have started, those ones who have bad coffee. Just let's get together and then let's see how we can do this. Please speak about that, and we see how we can work with you.
Coffee is the second most traded commodity in the world after oil. There are now solutions to a world without oil. There are no solutions to a world without coffee. It means coffee has a great future. What we need is for people who with ability to acquire knowledge to come and raise the standard of what we produce in Uganda in terms of coffee. I keep saying, if the amount of investment that was put in oil studies and developing oil in Uganda, if only 50% was put in coffee, we would be an incredibly wealthy country today. What has lifted Vietnam is coffee. There is promise in coffee. If you own a piece of land that is 20 acres and above, and that can be farmed, think about coffee. Your children will thank you for it.
Thank you, Robert. Also, we hold there are quite a number of action cohorts, and I spoke to them at the beginning. We have the financial markets cohort. Also, that is ongoing. I will not ask Keith. We have spoken so much about. So, as NSSF, we are trying to put you in those cohorts, and then we speak up. What we do in those cohorts is we speak about those things we want to do. We don't speak, we do the things that have been spoken about. So if you want to participate in any of these action cohorts, these are support cohorts. We are not providing free things there. We are not providing free land, free seeds. No, we are the only thing we are doing there is providing a platform where you can reach the likes of Robert, the likes of Keith. We are able to call them, and they will probably answer our call, and you may not be able to call them. So use that advantage while they are still generous to us. Book assignment, and I'll start with you, Maurice. One of the things we do is we share with our public a book or two that you think that they should read, and you think it could be beneficial to them. So what is that book, Maurice, that you would share?
I should have prepared for this. I need to go back and look at my library with this gentleman. I would honestly not speak to a book in the space we are discussing. But if you asked me, I think at the basic level, I remember when I actually got hold of Rich Dad Poor Dad, it was quite an interesting read. And it's been one of the books we give to all the children going into high school. And it's because savings, as Robert said, and Keith, starts at a very young age, and you need to understand the discipline of saving. And I thought it was quite an interesting read. Otherwise, I may take you into the political space where, Robert made quite a lot of money, and I will stay away from that. So
we're having a serious discussion.
Yes,
Then you
so
want to bring...
I can't bring back politics, so I will stay away from that, and maybe that's homework for me, and I'll be listening to the books they recommend, and I'll probably also pick a book or two from these two gentlemen. Keith, yes.
I'll jump to you too. No, let me jump to
Robert.
A book or two?
No, so mine will be very quick. Just go to Aristoc and ask for 2 books and buy them and read them. And they're very quick reads. Go and ask for Sekalala's book, How to Make Money, I think that's what it's called, and BMK's book. Just go...
The latest book.
Yes.
The most recent book.
Yes. Just go to Aristoc and say, I want BMK's book, and I want Sekalala's book.
And these were all local entrepreneurs.
These are our
Great.
entrepreneurs. Yeah. Just read those 2. If that's all you read this year, you are sorted.
Perfect.
I will add on a third one for you. When you're in that same bookshop, look for Harvest Money. It's one I keep giving out for wedding gifts.
You caught him red-handed.
Robert,
that's below the belt.
Robert is still CEO until the 30th of April. So marketing. And Keith, finally?
To think
about the book I last read, but I'll recommend an interesting book called Man's Search for Meaning. It's a very small book by a man called Viktor Frankl. It's really, we're talking about self-control and being able to control your emotions. Just look at that book. It was written by a Holocaust survivor, who got arrested and jailed 9 months after getting married. Just 9 months after getting married. But yeah, it's a bit of a tragedy, but it also shows the power of the mind in whatever you decide to do. If you want to be economic, go and read Lee Kuan Yew's book, From Third World to First, and just see how transformative a country can be in one generation.
It requires discipline.
Which Ugandans don't have.
Yeah.
Thank
a
you
third one,
so
a
much.
third one could be the mystery of capital.
The mystery of
The
capital.
mystery of capital.
Okay.
So you see, when you keep him last, he gives you a lot of...
Thank you so much. Thank you so much. From my team, when I usually ask them, they tell me about the different billboards they read along the way. So this is going to be an interesting assignment for my team and myself. From NSSF, we thank you so much. We thank you so much. SBG, the coffee you had, it was made possible by SBG. Yeah, we don't use the savers' money. So savers, you shouldn't be worried. Market players such as SBG have made the coffee possible today. The FL team from NSSF, we have the live stream team, Live Extreme. Thank you so much. The gentleman today, someone complained that he's just a gentleman, but we'll do better next time. No, not better. We'll do the reverse next time. But thank you so much, Robert, Kabushenga, Keith, and Morris. From us at NSSF, we thank you so much. Tune in for next, that will be May, I think the May the 20th, and we'll be talking about the time to take risk. And we shall have Dr. Adam Mugume and Hamis Semanda.
Master, can you please thank the people on social media who have engaged?
Oh yes, and the
Very-
people on social media. The people on social media, the audience. Apologies for those who didn't get the link, and we got some hiccups with the link, but we'll do better. Thank you so much for keeping the conversation alive, and please pass on this message. The essence of knowledge is to do. Action changes things. Thank you so much.
Thank you very much. Robert Morris.
Thank you, Headmaster.